This trade is another textbook case of why you never preempt a selling climax and how two-way absorption reveals a battle of opposing forces. As we mentioned earlier, this is the market equivalent of two elephants colliding. Their struggle creates opportunity. The day started off balanced, with neither buyers nor sellers taking the lead. But when the US session opened, we saw an aggressive push to the downside, culminating in a widespread, climactic, bearish candle. Then, the market stalled and started moving sideways. Now, here's where things get interesting. When we flipped to the 10-tick Renko chart, the consolidation revealed its true nature. This wasn't your everyday sideways chop. First, the volume on most of the Renko candles was significantly above average. Second, the points of control sat at the extremes of the range, showing buyers and sellers being absorbed at both ends. When price finally broke to the downside, the adaptive big trade indicator lit up, showing the largest lot size order of the day, 1,057 lots. On top of that, the delta for this candle was the most bearish of the session at -1753. Zooming in, you could see multiple sell imbalances and a stacked imbalance within the candle, a definitive sign of weakness. Following this breakout, price continued to sell off, but the buyers weren't giving up without a fight. After the sell-off, we saw a selling climax on the 3-minute chart. This was the largest volume candle of the day, but the close was closer to the middle of the candle rather than the low, a classic sign of absorption. The cluster search indicator confirmed this, detecting buying volume concentrated at the tail of the candle. Even more telling, the candle delta flipped bullish at +1802. As the last remaining sellers were absorbed, price drifted slightly lower before reversing, breaking above the selling climax candle. On the retrace, the market tested the selling climax and put in a last point of support at the lower VWAP band. Here, aggressive buyers stepped in again, confirmed by a bullish stacked imbalance, signaling a sign of strength. Price pushed higher, breaking above VWAP, signaling that bearish momentum was fading fast. Now, let's pause here. Two critical things happened at VWAP. Firstly, this was the same area where we saw the two-way absorption earlier, buyers and sellers battling it out. And secondly, for harmonic pattern traders, this area aligned perfectly with a bearish Gartley pattern. If you had the context of the two-way absorption earlier, you'd know that buyers got absorbed and are likely to exit their positions by selling here. Combine that with the bearish Gartley and VWAP acting as resistance, and you've got a strong case for a sell. And sure enough, price dipped back down. But here's the twist. Price action had already shifted after the selling climax, and strength was evident in the background. When price traded lower, it stalled exactly where the earlier sign of strength from the stacked buying imbalance had occurred. The buyers defended their positions, preventing any further downside. After a brief period of consolidation, the market resumed its upward trajectory. This example reinforces the importance of patience, context, and alignment with the market trinity and 7 key metrics. The interplay between volume, value, and volatility here was crystal clear, and understanding how these forces interact allowed us to stay a step ahead of the market.